So, some fund managers are buying Chinese stocks that are deeply depressed. So, the question is, should you? And we're going to talk a little bit about the Fed as we get their very first rate cut decision this afternoon. Is it going to be a quarter point? Is it going to be 50 basis points? Let's talk about that. Let's dive right in. Here we go. So, let's do there. Okay, awesome. So September 18th, this is the midweek update. Welcome. Thank you for being a member. We're going to cover the market trends. It's Fed cut day, so we'll figure out what's going to happen and how the market's going to react later today. And then also funds are buying Chinese stocks. Let's talk about that. Before we do, world's quickest disclosure. This is just information, not a direct solicitation to go buy or sell anything. Please always manage your risk tolerance, manage your stops, manage your financial plan. This is Invest with Rules. We help self-directed investors. I really hope this research helps you. It certainly helps me. In my family, we follow the trend. We follow big money. We follow risk management rules. That's the hope, that you follow the process. If you're struggling with the process, you don't have the time or things are just getting in the way. If you're looking for a little bit more time freedom, we do a trend following asset management strategy for clients. It's an investment advisory firm as a fiduciary, and we also do financial planning. So it is a kind of an in-depth analysis of your financial plan, your taxes, the whole dance. Okay, let's talk about Invest with Rules today. So this is the core of our research. So all eyes are on Jerome Powell this afternoon. Is it going to be a quarter point cut? There's a 45% probability this morning. Is it going to be a 50 basis point cut? 0.5%, 55%. So the question is, how is the reaction going to be? How do when Jerome Powell starts talking and makes his release, how does the market react? And that's how we are going to play it. We're going to follow the trends. But that's what's going on. That's where the market has completely waiting for this announcement. I wanted to share something. I always think it's really interesting to take a step back. I love things that are deeply depressed, that are heading to uptrends. But David Tepper and the very famous Big Short manager Michael Burry are quietly upping their bets on the Chinese economy. So if you're familiar with David Tepper, he runs the Appaloosa Management hedge fund. And he also runs the Carolina Panthers, who are a very struggling NFL football team. He's the owner. And Michael Burry is the kind of famous savant of the Scion Fund. Maybe not the largest fund ever, but he is kind of a savant from The Big Short, got really popularized. So they have been adding to their Chinese exposure. Let's talk about that today and then run that through our process. So here we go. So first, let's look at a monthly chart of the FXI. So the FXI is like typically the largest 50 Chinese stocks, and this is an ETF that tracks it. So it hit a high in the 50s, and we're sitting at 26. So a full 50% haircut since 2021. And it found some support in the mid 20s. You can kind of see where my mouse is if you can see that. And then it's just kind of bouncing, and you're seeing a little bit of accelerating volume, which is kind of interesting. If we look specifically at the Chinese tech stocks, KWEB is the ticker symbol. You're seeing it went almost to 100, and now you're sitting at $25 a share. So you've seen this wildly beaten up market. And first, why is it wildly beaten up? Number one is they are in a quad four, if you're famous from the Hedgeye or Ray Dalio process, a deflationary bust. Growth has been slowing, inflation has been slowing. It's been a tough environment for the economy. This is from a CNBC article. They're having somewhat upbeat-ish data. So declines across the country's PMI, so the manufacturing and weakening housing data shows that China troubles are far from over, so the pain isn't done. But last week's inflation data missed expectations, with transportation and home goods pricing as well as rents declining. Chinese sales and industrial data also missed expectation. There has also been some bright spots for the country. So first thing is they're still in this kind of deflationary bust environment, but their factory orders moderately grew. Also, their retail sales moderately grew, and their tourism and their travel is growing as well. So the question is maybe in Q4, could they be on a rate of change basis heading to a better scenario than they've been for the last several quarters? So Wall Street turns bullish. So let's talk about David Tepper and Michael Burry are upping their bets. Let's first look at the first bet that they've made. So Tepper, he had a really large position, and now he cut it by 7%, and now it accounts Alibaba, BABA, accounts for 12% of Appaloosa's $6.2 billion fund. Again, some of the funds we're tracking are well bigger than that with the Invest with Rules billion-dollar fund manager process. But what we're very simply going to do is we're going to bring it through our own proprietary billion-dollar fund manager research, and then we're going to look at the stages, we're going to look at the signals, and we're going to look at the trends. So let's first look at Alibaba, ticker symbol BABA, and this is the past 60 days, and BABA has been choppy. But the things that stick out to me, it's in a short-term and long-term uptrend. That's great. It's on a gas signal. That's great. The trend looks really good. It's on a hold from the billion-dollar fund managers. So you got a false signal. So a U-turn, if we go backwards here, is where I would consider, this is me personally, this is my risk tolerance, adding either a partial or a half position. Once it gets into a stage two advancing phase, a gas signal, I would go full position, whatever that full position would be for you. So you kind of got a half position, a little bit of cushion. You got your full, and then that would have gotten cut pretty quick because now you're just back to your half position. And then you would have maybe considered setting some sort of risk management stop that this wasn't working. But on 7/29, it starts working. You got your U-turn to your gas, and it's been really strong. So you got this around $76, and it went, apologies, to a high of 80. Pretty impressive. And now you're just kind of chopping around sideways. So BABA actually looks pretty interesting. Let's look at a few more tickers while we're on this theme on today's video. So Tepper also added to other Chinese companies, including JD.com, KE Holdings, as well as he just simply bought the baskets. He bought ETFs, kind of like what we do sometimes too. And then we'll go down to Burry in a second. But he was also adding to his largest positions include Baidu and JD.com. We're on Burry's portfolio. So let's look at JD.com. This is a internet retail, short-term, long-term uptrend looking good. So maybe this torture of chop is almost over. So trend looks great. Funds are holding. So far we have BABA in a great looking trend. We have JD in a great looking trend. The funds aren't accumulating that we're watching, but the trend looks really good. So maybe they're onto something. Let's look at BEKE, KE Holdings, which is real estate, which we know has been their biggest sore of the Chinese economy. Not good. Short-term, long-term downtrend, not covered by the funds. So this looks terrible. I would stay far away, but that's me in my opinion. So short-term, long-term downtrend, it looks like there's overhead resistance, a lot of it. Let's move on to the ETFs. We saw the monthly charts. You're actually in a short-term, long-term uptrend on the FXI Chinese stock, the top 50. So this holds a lot of kind of domestic companies as well. So trend looks great. So maybe the turn is starting to happen in Chinese stocks. If we look at the K-Web, not there yet. So obviously that one got beaten up the most. It's on a U-turn, so for me that would be a partial position. You can see in the newsletter and the advisory we don't have positions yet. But the question is these funds are early. These funds are getting in maybe before the data really starts to potentially improve. But that's interesting, right? So K-Web for me would be a partial position. FXI looks actually strong. We do have some emerging market exposure in the newsletter, like the emerging market bonds. We were playing India for a while. Brazil's slowly making a little bit of a comeback, kind of like China. And let's look at the final one. Let's look at Baidu. Baidu's been in a real tough spot, but short-term uptrend, long-term downtrend, fund no coverage. So U-turn means partial position. You can see the partial positions did well in July. Would have been more just a teeny tiny gain. Same goes for maybe a flat to maybe a slightly down trade on this U-turn, and then you kind of see where you're going now. So obviously we head into the Fed. The Fed's going to move the market. It's going to move the dollar. What's going to move Chinese stocks, which is going to move everything. But I thought it'd be fun just to kind of take a peek at what the Chinese stocks are saying because the huge opportunities lie from things that are politely left for dead. Um, in the past, we've looked at Chinese stocks. In the past, we've looked at bonds, which we own, which have done really well. In the past, we've looked at biotech, which we own, which are starting to really make a move. So this is where a lot of the opportunity lie, and where we'll place our calculated risk management bets when they're available. All right, so I will be glued to the live sheet, ready for the Fed, ready for everything, and then expect the email later today. Thank you for being a member, and I look forward to seeing you soon. Take care. Bye bye.